Hey everybody, hope everyone's doing well and had a good day and a good week. This is the Emini review for Friday, June 13th, 2025, and I'll add the marked up PowerPoint slide at the end of this video. So before we get into the 5-minute, I want to talk about the daily chart. I talked about it on Wednesday, and what's happening here, we see it all the time, and that is, here's a bull breakout, a deep pullback, a second leg up, pullback, and then a third leg up that subdivides into two legs of its own, one pullback, two. But we can count 3 pushes up in a channel. And even here, breakout, pause, so another subdivision. The second leg of the third leg is 2 legs of its own. And because of that, we're getting a nested topping pattern. A lot of traders are seeing this as too high. And by that, I mean bulls who bought lower are taking profits and bears are starting to sell and scaling in higher, expecting the channel to evolve into a trading range. So when we have consecutive legs up, 3-4 legs up, and we're far above the moving average, you have to be ready for the market to basically snap back to the moving average. Why is that? Because traders buying up here are paying far above the average price. The moving average is one measure of fair or average, and if we use that, how do we use the moving average as a tool? Well, we know that price is now in leg 3 or leg 4, if you count 1, 2, 3, or 1, 2, 3, 4. It's a late leg, big down, big up in the big picture, so we might be finding resistance in a big trading range, and we're far above the moving average. In order to justify buying far above the fair price, you have to be buying momentum. You're not buying value. You're buying value when the price is far below the moving average down here. Bulls buying down here as it's crashing are not buying on bull momentum. They're buying far below average, betting that we get back to the average price. But over here, 3 or 4 legs up, far above the average price, traders buying here are going to be quick to exit for the reasons I said earlier. And what happens? We lose momentum, and then price vacuums down to the moving average. This was a bad high 1. This is basically trading leg 4 for leg 5. Low probability, probably sellers above, and in this case we did not even get above the high of yesterday. You can see the same thing happening here. Tight bear channel, but many pushes down. 1, 2, 3, 4. If you're selling down here, you're going to be quick to exit because it's a late leg and you're far below the average price. You start to get trading range bars, a bad low 1, strong bull bar closing on its high. You probably just exit above this bar if you're short, because the risk is real that we snap back to the moving average. And it took a couple of legs, but that's what we did. And it's the same thing over here. So for context going into the day, that high 1 on the daily chart, probably sellers above yesterday's high. And it's not necessarily going to snap back to the moving average today, but we have to be ready for that. Five-minute chart, gap down. I like to look at the Globex chart, especially when there's a big gap like this. We're gapping far below yesterday's close and even below the low of yesterday. So let's look at the 15-minute Globex chart for a little more context, a little more information going into the day. And here's the information we have going into the day. Big bear breakout, bull channel. When I say bull channel, you should be thinking 2 things. Bull channel is a bear flag. And both sides here really realistically have an argument. There's the bull channel line. I could make a parallel for the trend line. And you can see prices being sustained between the trend line and the channel line. So the bulls have a tight channel that isn't very climactic. We're finding sellers at the channel line, buyers at the trend line, and it has momentum and inertia. The bulls will say, look, we've been in a tight channel since midnight going into the day, and it looks like we're pulling back to the trend line again, so probably buyers are on the open of the day. But the bears, they have a big breakout and then basically a bear flag and maybe even a 50% pullback. If we just take the start of this big breakout, the last strong bar, these big 3 bear bars, we're testing near the 50% pullback. So both sides have a legitimate argument. And because of that, I'm more inclined to think it's probably going to be a trading range open, which it is 80% of the time anyway. You should always assume it's going to be a trading range open. For the 5-minute chart today, and this is the Globex chart again. And whenever there is a big gap, I like to look at the Globex chart. And so that's how I'll start this review. Bar 1, bull breakout of a bull channel line. Late in a channel, the channel has been going on for many bars, and it's parabolic. We're breaking above the channel line. There's probably sellers up here more than buyers. Bar 2, an inside bar, not a great follow-through bar, especially for the context. If you're trying to break above a bull channel line, you want a lot of momentum. Ideally a bar like bar 1 on bar 2, breaking far above the channel line. But we had an inside bar, and to me it looks like a bad high 1. There's probably sellers above the inside bar. And then another inside bar, bar 3. So an II pattern, breakout mode, breaking above a channel line, but the expectation is a reversal within 5 bars and then a test of the trend line. So probably sellers above 3 and maybe even sellers below bar 3 because it's a breakout mode pattern and we're on the open. We just had a rally, and traders betting on the trading range may bet that the bull breakout fails, they fade it, and we get big up, big down going into the day. Bar 4, breakout bar, reversal and follow through. High probability that the bears get a second leg down here, and we still may test the trend line. So even if you sold the close of bar 4 and put your stop at a new high of the day, you could make 1 times your risk going for the trend line. So reasonable to sell and sell a pullback. And that's what happened on bar 5. The market pulled back close to the middle of the II pattern. The II is a contracting triangle, lower highs, higher lows. When you get a breakout of a triangle, sometimes it pulls back and tests the apex of the triangle or the midpoint, and then there's continuation. So traders could have sold here, sold more, and captured a second leg. Is there anything to buy? Probably not. It looks like the 3 bars down need a second leg down, but the bulls also need a second leg up. So it's still a trading range, big up, big down. Bulls and bears are fighting for control. They both want a channel in their direction. So probably buyers below down here and sellers above up here. 6, a doji, not a very strong buy signal. It's a high 2. We went above bar 4, and then we're reversing up on 6 again, but very tight bear channel. Probably sellers above 6. Bulls need at least a micro double bottom. We triggered buy and found sellers above, but now 7, not a very good sell signal. It's a low 1 with a big bar, so big bar, big risk, and the context is bad. We're testing near support the bull trend line, so probably buyers below here. 9, testing lower, the low 1, getting triggered, but it wasn't a very good sell setup. Now we have a couple of legs down, maybe 3. 1, pullback, 2, pullback. 3 legs down testing support, so probably more of a buy zone down here, but better to wait for a stop order buy, and really not a good stop order buy above bar 9, inside bar 10, probably buyers below. Maybe sellers above. We're in a support area in leg 3. And then testing lower, looks like we have more clear 1, 2, 3 pushes down here. We also have a 5-bar micro channel, so better for the bulls if they can break the micro trend line by the bears and then get maybe a micro double bottom in a buy setup. But the momentum for the bears here, not very good. This is basically a spike in channel bear trend testing support, and the bulls can simply redraw the trend line. Maybe it's a little wider, and the bears are hardly poking below it. 12 breaking below the trend line, good for the bears, but location and market cycle not good for the bears. 1, 2, 3, 4 pushes down. Bar 12 might be a buy the close bar. It's one of those bars that I would highlight in yellow on my end of day chart markup, because the signal isn't a late leg, it's leg 4. And if we look to the left, this is still, again, the Globex chart. Looks like there's support here. Maybe we test a little lower, but if we do get down to this tight trading range, we got the bull breakout before, there's probably buyers in that area. In the buy zone, if this is the breakout and this is the pullback testing the breakout point, maybe it's here, then the buy zone is between these two horizontal red lines. A lot of lines on the chart, but I have this one for the 3 or 4 pushes down. This is the bull trend line, and then this is the breakout point from this trading range. The bulls broke out, pulled back, tested it, and then got a couple of legs up. This becomes support. And if we do get down to the bottom of the range, this is also probably support. So really the bears need to break far below the lower horizontal line. And right now we're in the buy zone. A bull reversal bar. It's an inside bar, but context is good for the bulls because of the rally on the open. It reduces the probability that today will be a bear trend day. I'm doing a project right now on day structure, and I'm going to share more about it in time. I'm still doing a lot of documentation for it, and I want it to be a good video, so it's going to take some time. But what I'm working on, basically, what I've come to realize is day structure is really important for day traders for a couple of reasons. And the main reason I've realized is that we need to build systems for the specific day type that we're given each day. And you can't just build one system and apply it to every day and really hope to go very far with that. You really need to customize what you're doing to what the market's giving you on any given day. So the reason I'm taking a step back to work on that is because, well, the plan is basically have strong definitions for day types, and that's kind of threefold. For every day type, or for every day, there's a day type, a subtype, and a tone. And what I've decided to do for day type is have 3 main categories. The day can be a trend day, a trending trading range day, or a trading range day. Every day falls into the category of one of those 3 days. And what I need to do is have strong definitions for each. Then each day has a subtype. And for subtypes, I have about 15 different terms for subtypes, and I'm not going to go through them all. I'll get into that in the video that I make on the subject. And then for tone, it's simply bull or bear. And the reason I'm talking about this is because if we think about what's happening today, and when I think back to what used to get me in trouble, I might see a tight channel like this, bar 3 down to bar 12, and think, man, this might be a strong bear trend, I better get short. But I failed to recognize that we had this big rally on the open, and then it's basically a big up, big down, big confusion situation. It's a trading range. Traders are selling high and probably buying low. We can see on 13, we're finding buyers down here. So how does day type play a role? Well, if there's a big rally on the open and there's a reversal, it's a trading range open, big up, big down, reduces the chances that today will be a big bear trend day. As traders, we have a lot of decisions to make throughout the day, and the quicker we are, the better, because the computers have the edge of speed. Everything's programmed into the computers that we're competing against, and they'll beat us on speed every time. And what we need to do is simplify what we're doing, reduce our decision-making time, and then be able to execute. And one way to do that is to reduce the number of decisions we have to make. So when I look at this chart and we're 12 or 13 bars into the day, let's say we're just an hour into the day. At this point, I can confidently say that today is unlikely going to be a trend day in either direction, which means the systems that I have built for bull trend days and bear trend days are probably going to be on the back burner. Anything can happen, and this might be a trend day in either direction. There's always a probability of that. But you have to, the way I trade is to think of the higher probability outcomes and have the systems that are more likely to be needed to apply at hand for what we're given. So again, unlikely trend day in either direction today. My thoughts after an hour, maybe it's a reversal day, maybe it's a trending trading range day. And it could be in either direction, but I think because of the daily chart, I'm going to have a little bit of a bearish bias on the tone of the day. But also, if we think about what's happening, especially on the Globex session, we just redraw the lines. We also have higher highs and higher lows, higher highs and lower lows, which is an expanding triangle. So it's possible we are testing a bear channel line of an expanding triangle, and we test all the way back up to the bull channel line up here. And then when we get up here, if we get up here, maybe we reverse all the way back down to the bear channel line again. So maybe today's going to be filled with reversals, and it's an expanding triangle trending trading range day. The point is that I want to think ahead to what might be happening today and have systems ready for the context, the big picture context, the day structure, and then the phase of the market cycle that we're in. Now we have 3 or 4 legs down here, probably a trading range phase, and we're probably low in the range. We can draw a channel line like I had here. So probably always in long on the close of 13, buyers on the close of 13 and on any pullback, and also probably using a wide stop. If you buy above 13, maybe you put your stop down here. The problem with putting your stop below 13 is that the reality is that there's probably buyers below 13. It's a bad stop order sell. The context makes sense for buying, nested 3 or 4 legs down, big up, big down, and a trading range open, we might be getting another reversal up here. So if you're buying here, maybe better to use a wide stop. Or if you get stopped out below 13, be ready to re-enter. So reversal and follow through, really strong for the bulls. The bars are fairly uniform in size, closing near their highs. Context is good, always in long. We may pull back first, but high probability that we get a second leg up. And the high of bar 13 and the high of bar 14 become support. Probably sellers above 12. I said it's a 5 bar micro channel. Traders will sell above the last strong bear bar. So we'll just look at that one. And they get trapped on bar 14. So probably if we do test back down here, buyers at the 12 high. Some more follow through for the bulls, ultimately reversed. Bar 15 is a low one short, but big trendline break by the bulls. we can draw a trend line, bear trend line break, coming back down to retest the trend line and other support that got broken, like the bar 12 high. So probably buyers down below, maybe a 50% pullback as well. That takes you here, and that's about where the market tested. Bad entry bar for the low one short, also bad context, probably low in a trading range that seems to be pretty broad. So buyers down here, second leg up, still likely. And for the bears, they already have two legs down, 15, pause, 16. If we looked at a smaller time frame, it's more obvious. The problem with being short here, stronger bull breakout and a two-legged pullback. It may not look like two legs, but again, if let's look at the 1050 bar on the 1 minute chart. Here's 1050. Here's the two-legged pullback talking about. Bear channel with increasing buying pressure. So it went from a tight channel to a more broad channel. We broke the trend line. I just showed this on the 5 minute chart. This is just the perspective on the 1 minute. Bear trend. Here's the trend line break. Breakout point here or here. The market comes back, retests the breakout point. Also at a 50% pullback of the rally. Strong enough bear micro channel for a second leg down, 4 bars down. And it's a respectively strong bear reversal, probably sellers above, and a second leg down likely. The bears got their minimum. They got a scalp. Sellers above, second leg down. Then you get a high 2, bull bar closing near its high, in a possible higher low major trend reversal. Bear trend line break, retest, and this is a higher low. So probably buyers above here. A little bit of a surprise on bar 17. It's a big trend bar. It's leg 2 for the bulls, and it's nested because all double tops are low 2s. So leg 1, leg 2, but also leg 1, deep pullback, leg 2. Bulls get breakout and follow through. So for this low 2, is this a good low 2 to short with a stop word below 18? There's an argument for it. We might be in the upper third of the range at this point. The bear breakout is strong enough for a second leg down. The problem is that the bull breakouts are fairly strong. We have an open gap here. The line chart plots closes. If you look at the close of bar 13, the close of 16, there's a gap here. And now we have another micro gap, the high of bar 16 and the low of bar 18. So a couple of open gaps on these breakouts. And if it is an expanding triangle, we may have some more room to go to the upside. Also at this point, just a bonus stat, bar 1 is currently the high of the day. And that bar 1 remains the high or the low of the day about 20% of the time. When it happens, it's usually, in this case, if it's the high of the day, usually going to be a bear trend day or a bear trending trading range day. But in this case, fairly strong buying pressure on the open here. Big up, big down, buyers below, reversing back up. To me, it's not clear that we have the high of the day in. And then also, because we're on bar 18, by bar 18, there's an 80% chance we've seen the high or the low of the day. So the high or low of the day has been put in at this point most of the time. All that to say, as far as bar 18, probably buyers below and at least one more leg up, 1, 2, probably a third leg up here. And then we have a micro channel, so no pullbacks along the way. Bar 20, 1, 2, 3, 4, 5 bar micro channel, weak stop order, sell signal bar. probably buyers below, and another leg up. Again, the high of bar 1 is a magnet. Outside up, 21, it's a weak sell. A bad stop order sell is a good lit order buy. Reversal and follow through, 21, 22. Tight channel, nothing to sell. Probably going to get to the high of the day. And we're testing the bull channel line. We broke out above the high of bar 1. At this point, the upside might be limited. 1, 2, 3 legs up. But where's the selling pressure? Since bar 13, there's been 2 bear bars, and arguably 1 bear bar. Bar 16 may have closed above its midpoint, or maybe slightly below. So really only 1 strong bear bar, and it was bar 15, and it was after leg 1 for the bulls. Other than that, really no selling pressure along the way. So the bears have to do more before there's a reversal, and because of that, it's okay to buy and hold and be long. But it can be difficult in this context when you're at the top of a trading range to stay long here and probably just have a default exit, get out below a bear bar, closing below its midpoint. Rallying higher still. Weak sell below 25, probably buyers below, second leg up. Bulls get their minimum, breakout, pull back, second leg, reversal and follow through, but now we might be in leg 4. Let's clean up some lines here. One, two, or 2, 3, or 3, 4. So this is probably leg 4. Really not ideal to be buying up here at this point. This is probably a profit-taking area for the bulls. It's another one of those times where tight bull channel, yes, but what's the day structure? And that's why I keep going back to what's the day structure, because it's really important. At this point, it might be an expanding triangle day. We're getting higher highs, we've had lower lows. If it is an expanding triangle day, we could easily find a high of the day here and then get back down to a new low. As strong as this rally looks, we've hardly even had maybe 10 or 12 bars closing above the moving average. Strong bull trends collect many bars above the moving average, and they break out of many more bars than this. If you think about how far we've actually broken out, the bull leg started here, but only this much of it is breaking out. So it's poking above resistance here, but only about a quarter or a third of this bull leg is actually breaking out. Not as strong as it could be for the bulls. The context in this case, especially when you take the daily chart into consideration, probably more bearish. So it might be early to call it always in short here, especially based on the price action, but because of context, I think it's reasonable to be flat here and looking to sell more than looking to buy. Remember what I said on the daily chart about relation to the moving average? Let's think about that logic here, right here in this context. 1, 2, 3, 4 legs up, and you're far above the moving average. So you're buying a late leg, probably in a trading range. You're testing a channel line, and you're far above the moving average. So if you're buying here, you're buying momentum. If you get momentum, great. Maybe you just take profits at a measured move. But if you're buying momentum and you don't get momentum, your premise is invalid and you have to exit the trade. 30 is a problem for the bulls. 3-bar micro channel, strong enough for a second leg, but the second leg can be brief. There's probably sellers above bar 30. Reversal and follow through for the bears is small, but the context is reasonable to be looking to sell, but probably sellers above 30, not the close of 31. 31 is similar to 15 and 16, where this is 2 legs down to bar 30, the low of bar 30, pull back, and then the second leg down to the low of bar 31, also testing this breakout point. 27 high, breakout, and follow through. So bulls looking to get their second leg, but buy the closed bulls on 29, disappointed with 30, 31, probably going to sell on a retest. Again, if you're buying momentum here and you got 30.31, your premise is invalid. You'll just be happy to get out at break even if you get the chance. 33 retests the high close. 34 goes sideways. Now we're talking about leg 5 up here. 1, 2, 3, 4, 5. This is simple leg counting. I'm just using spike breaks. 1 spike break, 2, 3, 4. Now this is leg 5. If you're buying up here, you're buying leg 5 for leg 6, and that's very low probability. What traders should focus on doing for price action trading is trading leg 1 for leg 2 and leg 2 for leg 3 when the context supports it. But as far as trading leg 4, leg 5, unless it's a strong trend day, probably proceed with caution. And because of the opening of today, I have my suspicions about today being a strong bull trend day. And that's just about the 5-minute intraday price action, and that doesn't even take into consideration the daily chart context again. So at this point, I think it's probably always in short because of context. Bear breakout 36. High probability that we find sellers above and a second leg down. Breakout point 35 low. Okay to sell the close and scale in. Retest the breakout point, second leg down. Testing the moving average. Hard to sell when the market is approaching the moving average for the first time in 20 or so bars. It also might be leg 3, 1, 2, 3, or nested leg 2, 1, 2, 1, 2. So we might bounce here, but we're also testing this breakout point, the high of bar 26. So maybe more of a buy zone here. But as far as buying here, if these lines hold up and it's an expanding triangle, we're still near the high of the expanding triangle. And if it is an expanding triangle, there's a lot of room down to the downside. So bears can probably sell here, use a wide stop, and swing trade. Minimum follow through on the breakout, bar 38. Nothing to buy. Bar 39 is the best stop order buy. It is a high 2, high 1, high 2. But is it a high 2 and a strong bull trend? It's really not. This is not a strong bull trend. It's a relatively strong leg in a trading range, but to me it's probably a leg in a trading range when you look at the overall context and not a bull trend. Also, patterns are usually nested and price action is fractal, and we have a possible expanding triangle here. We do have an expanding triangle here, but also we have an expanding triangle up here as well. Higher highs, lower lows. Expanding triangles are a type of major trend reversal. This might be a final flag before we get the reversal down. It also doesn't take as much to reverse a strong leg in a trading range as it takes to stop and reverse a strong bull trend. Tight bull trend line, we're breaking the trend line, probably need a retest of the highs before there's a major reversal. I'm going to speed it up a bit. Bear breakout, pullback, bar 41, maybe a 50% pullback, maybe a little deeper of the sell-off. Testing the middle of a tight trading range, probably sellers, bar 41, strong enough for a second leg up, but the risk is that this is a bull trend. I use that term loosely. Bull trend, trend line break, retest, and then maybe a lower high major trend reversal of 42. Low probability short at the time of 42. It's still more likely bar 41 gets a second leg up, but then you start getting 2-3 bars against you, and bar 44 is suddenly probably a sell to close bar. And the problem for the bears might be leg 3, 1, 2, 43. But nothing to buy, so probably sell the close 44, sell the close 45. And it looks like we reached that measured move, 42 to 44. Profit taking, but is this a major reversal or a minor reversal? It's a minor reversal. This is a 5-bar micro channel. Probability is high that there are sellers above 46 and high probability of getting a second leg down. This might reset the leg count. We're still relatively high in the day's range, and if this is an expanding triangle, or even if we just test what is now the low of the day, it's not out of the realm of possibilities. We're also testing the low of bar 20. What's the significance of bar 20? We have a breakout, pullback, and then we start channel. And if you think about the market cycle, this is a spike and channel trend. The first pullback is where the channel begins. The spike is where there's consecutive lows. It's a micro channel, no pullbacks. We finally get a pullback below 20. This is the start of two-sided trading. Rally, pullback, market's channeling. Channels evolve into trading ranges most of the time. There's usually support at the start of the channel, plus the bears have 3 legs down. And we're breaking out of this bear channel line. So 1, 2, 3 legs down. At this point, we expect 10 bars and 2 legs sideways to up. Because of the bear channel line support in the start of the channel, bar 20 support. So there's a reaction, the low of bar 46 to the high of bar 47. Enough of a breakout for a second leg up, but still probably minor. It broke this tight bear trend line, and there's probably buyers below 47 for a second leg up, so probably buyers down here. But it looks like it's easier to make money selling than buying. Decent bull bar here, but not especially big. And then this is a small inside bar, so the selling pressure is stronger than the buying pressure in the past 15 bars. But after 46, we're expecting, like I said, 10 bars, 2 legs, sideways, 2 up. 1, 2, 3, 4, 5, 6, 7, 8, 9. So we have 9 bars sideways, and then possibly trend resumption for the bears. 1, 2, 3, parabolic wedge. Expectation is a minor reversal and then trend resumption. What did the bulls have here? It's a double bottom with 20 or 21. And it's a bull breakout bar, but look where it's testing. It's still a lower high. It's testing the close of bar 47, where traders got trapped on 48. We tested it on 49, found sellers. We tested it again on 53 and found sellers, and 55. Breaking out below 21, we have a close below, another close below, so we have 3 bars below, 1 poking below, the other 2 closing below. This might be a reset, resetting the market cycle. This might be a new breakout. And maybe you saw the close 57, stop up here. 1 R gets you to the low of the day, reasonable to sell here. 58 breakout bar, not a strong looking bar, but a relatively strong breakout because hardly any of the bar is overlapping with the prior bar. Maybe 90% of the bar broke out. And what this is, more likely, is a breakout pullback on the same bar. So probably sell the close 58, sellers above 58. It's also a 4-bar micro channel, nothing to buy. Sellers above, bears get their second leg down, racing down to the low of the day, probably support below bar 12 and 13, but strong enough momentum, bulls need a double bottom. I still have the bear channel line drawn from the expanding triangle. That might be support as well. Is this going to be a strong bear trend? Like I said earlier, like I've been saying throughout the day, this is probably not a trend day. Just look at the day. Even if we just look from bar 1, up, down, expanding triangle shape, probably buyers down here. Despite the strong looking selling, these are sell climaxes. This is unsustainable selling. This is an area where bears can sell, but they're selling momentum. We're far below the moving average. You get a bull bar closing on its high, you just get out above it. Climactic reversals don't really need bottom patterns like double bottoms or wedges. They can reverse rather quickly, hence the term climactic reversal. So if you're selling down here, probably got to be quick to exit. Breakout of the low of the day, breakout pullback 63, probably at least one more leg down, and then bull bar closing on its high. Might be better to exit above 65. We'll probably start to go more sideways here. We tried to break below the low of the day, and we found buyers. Now we're down and up for the past 5 bars, probably sellers above here and buyers below at a new low. This still needs a second leg down, but the bulls need a second leg up. And now we have maybe 3 or 4 pushes up to bar 66, 67. We're also testing near a breakout point created by bar 60, a low of bar 58, so sellers above here. 67, probably sellers above. Trend bar 68, but 90% of the bar is overlapping the prior bar. It's a bad stop order signal, and it's testing a breakout point after a stronger bear breakout. Strong bear breakout, weak rally. This is a channel on a smaller time frame. So it's a bear breakout, bear flag, maybe a low 2 or a low 3 on a smaller time frame. Probably sellers in this area. 68 more of a sell the close bar. 69 sell the close. But traders are scalping. This is becoming a tight trading range with a lot of overlap. Maybe we'll go back and test the low close of the day. And I suspect the downside is limited. This looks like we are evolving into a trading range. 72, 73, testing that low close, finding support, reversal up on a very small time frame. 69 through 72 is a bear trend. 73 broke the trend line, retested the lows, and it's basically a higher low major trend reversal on a smaller time frame. 74 probably will get a second leg up, but the upside is limited and the pullback might be deep. Deep pullback 75, probably buyers below, second leg up. Very deep pullback to a new low, but we'll probably test at least the close of bar 74, which we did, and probably the high as well. And then we might get back up to this high, but if we get to the 69 high, the 58 low, probably sellers there. And we actually closed right on that price. 78 was you can call it a wedge double bottom with 62, 3 pushes down, 1, 2, 3. But forcing you to buy right below the moving average. It's a big bar. It's probably buyers on a pullback rather than on the close of the bar. But too late in the day to trade it anyway. I kind of got carried away with this one. Did it more bar by bar style. But I like to do it once in a while anyway. And one more thing about just some thoughts to close up the video. There's a seminar on YouTube that one of my friends from Systems Academy recommended to me. It's called You Were Born Rich, and it's Bob Proctor. And I found Bob Proctor through Ali, and it was just basically a mistake, but I happened to come across him on YouTube in a playlist that Ali made. So I found Bob Proctor. I talked to my buddy about it. He told me about the You Were Born Rich seminar. It's a 6-part series on YouTube. And I found this about a year ago. And I've been watching it every day since. I probably watch 15, 20 minutes every day. So I've been through the seminar probably 6 or 7 times now. And I intend to keep watching it forever, honestly. I think it's incredibly helpful. It teaches first principles of success, and it doesn't matter what your goal is. That seminar can really help you reach your goals. But the point with bringing it up is there's a part in there where Proctor talks about Van Gogh. I think somebody asked Van Gogh, how do you do such beautiful work, such beautiful art? And Van Gogh said, first I dream my painting, and then I paint my dream. So with that, Proctor said, you'll never buy an original piece of art because the original is on the mind of the artist. And the reason I'm bringing all of this up is to say that, and I've said this before, I encourage everyone to make their own end-of-day reviews or trading videos in general with really whatever, anything, any subject, any topic. It's been really helpful for me to record myself and challenge myself, try to articulate what I'm seeing, be consistent, have clear definitions, and then be able to act on it all. And tying in Earl Nightingale, he said in Greener Pastures, and he talks about attitude, which he talks about attitude in another recording, The Magic Word, but in Greener Pastures, he says, when you adopt this kind of attitude, you start affecting life instead of passively receiving whatever it has to give. And you're becoming a contributor rather than a feeder. The point I'm getting at with encouraging everyone to do their own videos sounds weird because I'm basically telling my audience to stop watching me and do it yourself. That's basically what I'm getting at. And it's not to say that, I'm trying to think of a way to put it. Of course, if you're brand new, you need to consume as much content as you can. You gotta be listening to Brooks, Ali Moin-Afshari. Maybe you watch Brad Wolf. Maybe you watch me. Those of you who've been around in this Brooks price action industry for some time maybe you used to watch Al Brooks when he did his end-of-day reviews before Brad took over. I used to watch Al, and then I would watch Brad, and then I started doing my own reviews, and this is all tying into what I said about Van Gogh. If you're watching my end-of-day review, you're getting my thoughts, but you have to remember that the words I'm saying are preceded by thoughts in my head. So basically, I'm seeing the chart, I'm thinking about it, and then I'm talking about it. So I'm getting maybe double the exposure that someone who's just watching is getting. And again, a day one beginner cannot really do an end-of-day review. I'm not suggesting you just go out and do it. But you get to a point where you've studied long enough and you understand things enough that it may be challenging, but it can be really beneficial to do this. I've been doing YouTube for about a year, and the progress I've made is insane, I think. And I look back, I had the confidence to be posting a year ago, and I look back at my old videos and I cringe. And I'm like, I can't believe I had the confidence to be posting and the things I was doing and saying. And I'll realistically be saying the same thing a year from now. So that's just some thoughts for the end of this review. So I'm going to wrap it up here. I'll add the marked up chart at the end of this video. Today was an expanding triangle, bear, trending trading range day. That's the way I classified it. And that's going to do it for this review. So thanks as always, everybody, for watching and listening. And I hope everyone has a great weekend.